Welcome back, traders. Today we are going to do a deep dive into Bit Digital using the Simply Wall Street platform. This is a new website that I found recently. I mean, I don't know how new it is, but it's new to me. I like the user interface. I enjoy the graphical representations of things. Also, the dark mode looks pretty nice. So I'm not affiliated with them in any way. I just found it recently, and I really like the way it displays information to me. So today we're going to look at the financial health of Bit Digital. This is not a fundamental trade. So we're not really too concerned with most of the fundamentals other than the balance sheet because the Bitcoin mining stocks need a healthy balance sheet in order to make it to the next Bitcoin bull run and, as a result, actually make money for us in share price. So if you can't make it there, then it will go bankrupt. And we don't like that. We don't want that. Anyways, this is the balance sheet right here. We got 4 out of 6 healthy check marks here. Bit Digital has a total share equity of 91.7 million and total debt of 0. They have 0 debt. That is fantastic. That is great. Their financial position, as you can see here, the blue being bigger than the green is good, and it is significantly larger. One other thing we're going to do, I'm going to navigate away from this platform for a second, is look at the current ratio. The current ratio is the ratio of current assets to current liabilities, showing how much more assets they have than liabilities as a company. So in this case, we want the number to be higher. Higher is better. If we look at Bit Digital, currently they're at a 10.3, and we're in a crypto winter, and they've kept it above 8. I was going to say 10, but no, that's 8. Above 8 that whole crypto winter here. So that's been really good. Last time they're in the crypto winter, they got all the way down to a 2 right before the halving and took off to 18. And we've seen in 2023 that this is when the ordinals I think came out up here. Bitcoin ordinals. Anyways, we're at a 10.3. I wonder how much the ordinals play into this current ratio staying so good for them with their cash flow increasing. That was a very loud noise outside. Anyways, that's what we're looking at there. Current ratio. How do they compare to Marathon actually right now? Marathon has 14.91, second biggest player in the Bitcoin mining space. Riot Platforms, theirs currently is 6.5. So Bit Digital is better than Riot right now. What about CleanSpark? Ooh, CleanSpark's got a 1.4. Ooh, I don't like that. That's not good. I mean, it's better than 1. It's better than 1. They have 41% more assets than liabilities, but I'd rather have honestly 1,000% more assets than liabilities. So that concerns me a little bit. But let's keep on trucking here. Debt to equity. I mentioned just a moment ago, 0 debt. Bit Digital does not have any actual debt, and that's fantastic. That means all the cash they have, all the cash or assets that they have, that they can use to keep operations going and not servicing high interest debt. That's fantastic. I love it. Okay. Balance sheet, all this stuff is green. Beautiful. I love it. Looks really good. Cash runway, they're saying they have less than a year of cash runway, but they don't really need a year. They need more like 9 months. And they can trim the fat more, I'm sure, in order to make it there if necessary. So I'm not too concerned about that, especially since they have 0 debt and so many millions of dollars of equity, as well as 10-to-1 current ratio. So if they needed to, they could sell off some assets and make it to the end. So let's go to ownership. This is the part that I'm really interested in right now. We've had no insiders selling or buying right now, so that's pretty neutral. But if we scroll down here, we look at general public owns 69.1% of the shares and institutions own 30%. That's kind of a lot for such a small company. I mean, it's less than a $200 million company, and they've got 30% institutional investment. And we're going to see here in a second, right here, BlackRock. This is what's so interesting about this to me right now. I discovered this like yesterday. BlackRock is the majority shareholder of this tiny little company. They've increased their shareholdings by almost 15 times, 1,490% increase of their shares held in Bit Digital. Of course, that is only $11.4 million, but for them to invest that amount, I'm sure they are expecting a profit from this. Honestly, it's a drop in the bucket, but I'm sure they chose this one over other Bitcoin miners with the expectation that it would outperform. So that's great. I don't know who State Street is, but wow, they increased their position by almost 35x. So that's pretty fantastic. If we scroll down here, we'll see we've got a couple of other names that we're familiar with on here, like Vanguard. Here we go. We got Vanguard right there. Vanguard did not increase or decrease their holdings. of Bit Digital. So that's more of a neutral stance there on Bit Digital from them at a 0%. They've got $1 million of holding here. That's interesting. Morgan Stanley increased their position by 105%, not to be mistaken with JP Morgan Chase. They share a name here, but not the same company. They are pretty big though. Let's see, let's scroll down a little more. We got Charles Schwab is also invested here. They've not increased or decreased their holdings, but they do hold some Bit Digital. That's interesting. Invesco, they do the Qs. They're down 34% on their holdings for Bit Digital, but that's not too interesting. The thing that was very, very interesting is BlackRock, majority shareholder, increased their position almost 15x. That's very bullish. That gives me a lot of confidence in Bit Digital right now. Let's look at what Marathon is looking like. So their financial health is bad. 1 out of 6 here. Now, this doesn't concern me as much as it would if they were a smaller company. This is a $2.2 billion company, as you can see here from the market cap. It's a $2.2 billion market cap. They've got $610 in equity and $610 million in equity and $734 million in debt. So I don't love that. It really depends on what their interest rate is. It's probably debt they got before that all went really high. Scrolling down here, financial position. Short term, they're looking great. Long term is usually 12 months plus. We have a halving coming before then, so I'm not too concerned about that. Let's see, debt to equity. I don't like their debt to equity. They have $734 million in debt and only $610 in equity. That concerns me a little bit, but I'm not as concerned about that as I probably should be or would be if they were a smaller company, and I'll show you why here in a moment. Yeah, their balance sheet doesn't look great. And their cash runway, yeah, they have less than a year of cash runway, but they don't need a whole year. They need about 9 months. Anyways, when we go down to ownership, this is where I start to change my tune from bearish to more bullish. We look here. So insiders have been buying. Within the last 6 to 9 months, insiders bought 95,000 shares. And within that same period, or within the last 0 to 3 months, they sold 31,000 shares. In that period, Mara hit a high almost of $20, coming off of some lows around like $2 or $3. So that would be a huge return on investment. So I can't imagine why anyone wouldn't take that. So I'm not too thrown off by this, and it's pretty small by comparison, especially compared to how much was bought. Anyways, scrolling down, general public owns 59% of this. Institutions own 40.4%. That's a pretty big number for such a volatile stock. So I like that. This is what gives me the confidence to stay in this position. 40% of institutions, 40% institutional ownership is very good for such a volatile and honestly bit of a risky stock. So if we come down here, Vanguard is the biggest owner of this stock at 10.05%. That is very significant because when an individual or entity owns over 10% of a company, there are new reporting rules that are imposed upon them, meaning Vanguard feels confident enough in owning Marathon Digital that they were willing to go over that 10% ownership level. So that's really interesting. And they also increased their position nearly 60% this year to reach that level. That is very bullish. I like that. And Vanguard's pretty conservative in terms of like they're not super risk on compared to some other investment banks. So that gives me a lot of confidence. BlackRock's number 2 at 7%. They've increased their position by 43% this year. That is great. That is fantastic. Morgan Stanley over 100%. Charles Schwab, 43% increase in Marathon ownership. I don't think these big banks would be putting in, increasing their shares if they were concerned about the poor balance sheet right now. They must see greater reward than risk in this trade. So that gives me confidence to hold on to what I have of Marathon Digital. Let's see here. And SquarePoint increased their position by almost 20 times. That's pretty big. That's very bullish. I don't know who they are, but they're very bullish on this stock. Now let's go look at Riot. Riot has such a good balance sheet. That is really beautiful. 5 out of 6 checks. They are the biggest. Actually, no, they're not. Marathon is. Marathon's the biggest. I thought Riot was. Marathon's $0.2 billion bigger than Riot. Never mind. They're the second biggest in the space. I lied. Riot is the second biggest. Marathon is the biggest. Anyways, financial position. Big blue, little green. That's good. Very good. Very, very good. They're very healthy. As you can see from all the checks. Very healthy. I like it. They have no debt, right? No, they have $900,000 of debt and $1.2 billion of equity. That is great. They're going to make it to the next bull run. They're going to. I have no question in my mind that they're going to. This is all green cash runway. They have more than a year of cash runway. Uh, okay, but they do have less than a year of cash flow continues to reduce at a historical rate of 51% each year. So they currently have enough cash runway, but maybe not. That's their only bad check mark there. Anyways, let's go down to ownership. This is where it gets a little dicey for me on Riot. All sells. No one's buying. None of the insiders are buying. Within the last year, no insiders bought. They only sold. I don't like that. That concerns me. That makes me nervous. Even with their stellar balance sheet, that concerns me. Don't like it. Ownership breakdown, 56% public, 38% institutions, a little bit less than Mara. Individual insiders, 5.4%. How many were insiders on Bit Digital? 0.4. How about Marathon? Insiders, 0.5. I don't like that 5% of the float is owned by individual insiders and that they are selling. That's significant enough to cause a crash if they decided to all sell at once. Not that they are going to, but if they did, it'd be very scary. Anyways, if you notice here, Vanguard does not own over 10% of this company. Now they are the top owner of Riot Platforms, but they did not wade into the 10% plus range as they did with Marathon Digital, where they went over the 10%. So they stayed under the 10% here on Riot, probably strategically. They've increased their positioning by only 18% to $196 million. How does that fare to Marathon? Vanguard has $219 million in Marathon and an increase of 60%, so they believe in Marathon more than Riot right now. BlackRock is number 2 at 6.5%. They got $131 million invested in Riot. They had $153 million invested in Marathon, which is a 43% increase versus a 5% increase in Riot. They too have a stronger conviction in Marathon than they do in Riot. So that's interesting. And that makes me take pause despite their much better balance sheet. That makes me pause. We look down here at Schwab too. Not that they're super, super important, but they got a 0.2% increase, whereas on this one they had a 43% increase on Marathon. So it looks like all the big banks believe more in Marathon right now than they do in Riot, or at least in their ability to make a return off of that stock. So take all this information with a grain of salt, make your own decisions. I'm not telling anyone to buy, sell, or hold anything. This is not any type of financial advice, but the numbers kind of speak for themselves here in terms of what the big banks are doing and thinking and where they believe their capital will appreciate the most. Now let's look at CleanSpark. CleanSpark has a fully green 6 out of 6 balance sheet. I like that. I like that a lot. Their short term is slightly higher than their current liabilities. That's a little bit of a red flag for me personally because they need to survive short term. Long term right now is not as important as short term for Bitcoin miners. They need to make it through the short term to have a long term. So that's concerning. Long term though, they're looking great. So hopefully they make it to the Bitcoin halving and they'll be doing very well. They have pretty low debt to equity right now, 17 million debt, 603 million equity. That's really good. They're almost like basically debt free, honestly. They could pay off all their debt pretty easily. Wow, I went way far up somehow. All right, now we're going to go down to ownership. Let's look at the ownership. This is bullish. Insiders only buying, no selling. Breakdown 60% public, 35% institutions, 3% individual insiders. I don't love that as much, but it's not as bad as 5, but it's not as good as 0.2 or 0.5. 35%, so they got a little bit less or more than Bit Digital. Let's see. A little bit more than Bit Digital. Almost as much as Riot, not as much as Marathon. 35.5% institutional ownership. Now, who are the big owners here? BlackRock. BlackRock is a big owner. They increased their position by 32% this year, and they are at a position of $29.9 million in CleanSpark. CleanSpark has a $671 million market cap, whereas Bit Digital has a $200 million market cap nearly. So you got 3 times the investment for about 3 times the size of the company. It's from BlackRock, but BlackRock increased their position size in Bit Digital heavily in order to reach that. So I'm still more bullish on Bit Digital, but this is good. I like this. I like this a lot. They're increasing their position, holding about half as much as they did in Marathon Digital, but this is a much smaller company. Vanguard is number two at 4%. They increased their position by 48% in this stock, up to $27 million. What is their ownership in this one? It's actually pretty low, I think. Vanguard, yeah, $1 million. So Vanguard believes in CleanSpark much more than they do in Bit Digital. Some of this speaks for itself. It is making me think CleanSpark may have a place on my in my portfolio, and I will look at it further to make that decision. But that's what we're looking at right now. The big institutions are picking up Bit Digital, they're picking up Marathon, and they're picking up Spark more than they're picking up Riot platforms. So Riot, I'll probably stick away from or stay away from, even though they have such a good balance sheet. They're definitely going to make it to the Bitcoin halving, but it seems like, to me anyways, that the big investment banks think that their money will be better suited in some of these other stocks based on what I'm seeing in this data. Now, of course, again, not financial advice. Make your own decisions, do your own research. And with that said, please like, comment, and subscribe, and have a profitable day.